Good morning. My name is Daniel Ang. The time right now in Singapore is 17 minutes past 9 in the morning. The date today is April the 3rd, the first trading day for a new month. And today I'm going to give you an update on the energy markets because something actually happens over Sunday. Okay, so what happens on Sunday was OPEC plus, meaning OPEC plus Russia, had a virtual meeting to talk about production, and they surprised the market by announcing further production cut of 1.16 million barrels a day. This is totally unexpected because just a couple of months back in November last year, OPEC Plus announced 2 rounds of production cut. With the latest 1.16 million barrels cut in production, they bring the total production cut to 3.66 million barrels a day. This will last until the end of 2023. So this is definitely a very drastic and very bullish piece of news. Now, when you look at the chart itself, this is a 4-hour time frame. You can see the price reacted early in the morning in Asia. This is referring to WTI CFD crude oil products, not the futures products. Okay, this is the CFD. Price bumped up to $81.51 this morning in reaction to this piece of news. Now, remember, on Friday, market closes at $75.68. So this is very far away from where we closed last Friday. So this is definitely having an impact in the marketplace. Now, remember, London has not opened, so is New York. So we will have to see what New York, how the London boys, the European reacts on this piece of news, because the other benchmark crude oil is Brent, which is the North Sea grade of crude oil. So both the WTI and the Brent crude are the two benchmark crude oil that most people follows in the energy markets. Definitely, it will have a big move in London later on when the London market open in the afternoon. Now, just give you a sense of where we are right now, let me refer you to the weekly time frame. Now, this is the weekly time frame. Now, if you remember, when WTI announced COVID-19 as a pandemic in the late part of February, what happened was the crude oil prices actually collapsed. And because the idea is that if the whole world locked down, then the demand for crude oil will be drastically cut. It was so bad that the market had an irrational reaction to that piece of news. In New York itself, in the futures market, crude oil actually went below negative, went below $0, okay, to as low as negative $40 per barrel. Now, this is irrational. Something as valuable as crude oil should never be priced in negative territory, but that is exactly what happened. And it will never happen again. This is an aberration, but for the purpose of doing analysis, the CFD products, of course, will never go below zero. So the lowest pricing in the CFD for WTI was 0.01 cent. Okay, now let's assume this is the low in the spot market, because anything below zero just does not make any sense at all. Okay, so now the high traded last year was $129.42. Now, this is in reaction to Russia invasion of Ukraine following the February 24th, what you call special military operation by Russia when they moved into Ukraine. Shortly thereafter, the market reacted by taking crude oil prices a lot higher to $129.42. But since then, prices of crude oil has been steadily coming down. In fact, 2 weeks ago, crude oil was quoted as low as $64.33. So from where we are right now, $81.50 to $64.33, that's only 2 weeks time frame. Okay, so this price movement here is going to be very, very drastic. So drastic that I think the $64.33 is going to be a long-term bottom in crude oil prices. Going forward, I am very, very bullish on the outlook of crude oil, because the war in Ukraine is nowhere near over, and the fight against inflation is nowhere near over. And on top of that, we have so much stress in the banking sector. So going forward, there's going to be a lot of stress both in the geopolitical space as well as in economic space here. So the way I look at it, this price over a longer period of time, basing on the weekly time frame, I have a price target now at somewhere near the $200 per barrel. Now, it may look a little bit far-fetched now, but over the next few months, we may see prices continue to escalate higher and higher and higher, especially if we get a deterioration in the geopolitical space, as well as the war in Ukraine. I do expect the situation to get from bad to worse And of course, the unfolding banking crisis may add on further stress to the marketplace. We will see what happens, but I think technically speaking, there is a potential for a market to go up massively from here onwards. Now, my name is Daniel Ang, and periodically I will give you updates on the various markets. Today, this is my sharing here. Today, I picked WTI because this is the hottest news right now. In the meantime, I wish you guys safe trading. Bye-bye. Take care.